Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at Facebook on the daily and weekly and shorter term time frames, so a clear lower high and lower low now, increasing bear volume, bearish MACD cross. Obviously, a lot of this has to do with market weakness. 50-day moving average support held just like it did back in mid-October. That is a very clear key support level on the daily time frame, 128.55. Clear resistance at 132, the psychological level. We've gotten above it or right at it 4 times in the last 5 days. Unable to close above it. Weekly time frame is right at the 10-week support, which we have bounced off the last half dozen times we have tested it. That's at 128.86, and if we close below that level, we will see a bearish MACD cross, and we'll be looking down at the middle Bollinger Band of 124.62. So we have earnings tomorrow after the bell, and it's going to obviously have a very significant impact. We're either going to lose this key 10 or the key 50-day support and key 10-week support, or we're going to break to all-time highs. It's pretty much a do-or-die scenario right now in terms of the outlook for the next month on Facebook here. And today there was some really nice trading opportunity in both directions. Obviously, the weakness first thing. New low of the day here, 15, 20 minutes in, losing all 5-minute moving average supports, rejecting from the 20-period moving average resistance, and then the bears just absolutely took over. The bounce occurred when the market bounce occurred. And whenever you have high volatility days and big movement, big volume, the correlation between the S&P 500 and individual names is way stronger. So you can look at a ton of charts and they're all going to look like this, and the bounce all occurred at the same level. So I just did the Apple video, and it's pretty much the exact same chart. So once we rejected from that 20-period moving average resistance, we rejected from the 8-period exponential, this little blue line here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times. So we know if we're going to reject 12 times that when we turn that level into support, that's a bullish indication. So we closed above it here on this candlestick, and then we saw 20 minutes of upside. If you got in at the worst time on that candlestick, 129.21, the top was 129.76. That's a 55-cent bounce in 20 minutes. And weekly Facebook calls saw really nice gains. Then we back tested and held the 20-period moving average support. But just like Apple and SPY, the hourly time frame could very easily be a bear flag here, leading to further downside. We're going to have to turn the exponential 8-period hourly resistance into support, just like we did on the 5-minute earlier. That's 129.83, and that level is going to drop in after hours and pre-market, so we'll have to keep an eye on that. But this is a bear flag setup on SPY, Apple, Facebook, all these big names. And if we don't see continuation to the upside, or at the least a higher low to form before getting above these exponential moving average resistances, we will likely see a move back down towards the lows. So this is going to be a lot more clear pre-market. That's why pre-market is so important. We'll be watching to see what this hourly chart looks like, what the setup is heading into the day, and we'll see tomorrow's action as to whether or not the bulls are buying the dip into earnings, and that will give us some clue as to trader and investor sentiment. So I appreciate you watching. We'll check back in after hours, after the initial reaction to earnings. Should be lots of action tomorrow with the FOMC and Facebook earnings, big time volatility and volume. And I will see you tomorrow. Thanks for watching.